The Reserve Bank's Monetary Policy Committee has a slightly awkward timing problem this week. They have to make a decision about interest rates on Tuesday, but on Wednesday they get crucial wages data, and on Thursday even more crucial employment data. But they'll probably cut interest rates anyway and then have a couple of restless nights waiting to see if they were right. Market punters are more than fully persuaded that there'll be a rate cut on Tuesday, but then again the market odds for a rate cut when they met on the 8th of July were 91%, and that was a losing bet. Since then we learned that another 33,600 people lost their jobs in June, which was nice. That took the unemployment rate up from 4.1 to 4.3%, just what the RBA wanted to see. The monetary policy pooh-bahs think that with 659,600 people unemployed, the Australian economy is at full employment, fulfilling that part of their mandate. The 626,000 jobless back in May was not enough, or rather 6 out of the 9 members of the committee thought that when they met a month ago. Majority ruled, so no rate cut, sorry. On Tuesday, all eyes will be on whether there's another split decision. Will any dissenters vote to hold rates because they want to see more people lose their jobs? To be fair, the quickfire series of rate hikes that began in May 2022 has produced the smallest rise in unemployment of any economic slowdown in history. But that's mainly because of a huge burst of government spending. So happy result for the Reserve Bank. They get to look like benevolent geniuses, getting inflation down without as much unemployment as usual because governments have picked up the slack. But it's also meant they've been slower to cut. In previous cycles, they would have cut rates by half a dozen times by now, even maybe 10. Tuesday will be number 3.